Good Friday morning, everyone. So glad that you could join us here on the Market Day Report. I'm John Jenkinson. Thank you very much for being a part of RFDTV and Rural Radio 147 on the SiriusXM app and on SiriusXM as well. We had some overnight sales this morning to report. These came out just a little bit ago. And as we look at these numbers, we see that the overnight sales really amounted to 120,000 ton of corn. It sold to Spain on that overnight trade. So we'll see if the market takes note of this here yet this morning. As we pause the overnight trade, and by the way, we do want to mention that right now the trade is in its pause mode here. It'll reopen in just a few moments at 8:30. But when we did pause, we were mostly higher all the way across the board. Let's visit now with Rich Nelson. He is with Allendale Incorporated, as we do each and every time this same time of the morning. Good morning, Rich. Happy Friday. And kind of another quiet trade last night, but we did move just a little bit higher for all three commodities.
Exactly right. Now, we have some small, slightly supportive stories here hitting the grain trade today. Not really going to give us a major move, but certainly some small moves higher. Number one, some talk that Argentina's crop acreage may only be up 5% as far as corn this year. Our own number was a 9% increase, so that might act as a small supportive tone for us. We've got some overnight sales, which we'll mention here in just a moment. And as far as newest news, EPA is not going to go along with those changes to the ethanol policy that some people had floated just a few weeks ago here.
All right. How big of a story do you think that EPA was for the corn industry?
You know, for the most part, I don't think the trade was really expecting these changes to take effect. These changes, of course, would have included corn or ethanol that would be exported as qualifying for the domestic ethanol program here in the U.S. That, of course, would have cut some of the bushels going into corn for ethanol here in the U.S. So this one, I don't think it actually was really floated as a realistic idea from the trade's perspective, but it certainly does take off one of these small looming problems we had on our backs here.
While we're on the topic of corn, Rich, how do the charts look going into this weekend?
You know, for the most part, for corn, not too much unchanged here in the past few days versus, for instance, last Friday's discussion. As it stands right now, corn still struggling to get a close above 350 as far as a serious close and a serious change in the sideways direction for the past few weeks. As far as soybeans, you can certainly argue we are in a clear-up trend, but perhaps that $10 mark on these futures might be a little too much to push past here.
So in your opinion, is the trade going to be watching to see what Monday's USDA report and NASS report says about harvest progress, particularly for corn?
I think this will be watched. I think, however, given the current weather forecast, which still is for the most part suggesting a good harvest pace, I don't think we'll get too excited about it either way. We'll watch it, but certainly as long as this forecast holds, we probably won't get too excited here.
Outside markets also have quite an influence on this grain market, and one of the things that some in the trade follow is that VIX index, or that fear index. Where is it this morning, and just how comfortable is the trade at putting money back into the commodities?
You know, as far as this whole issue on the commodity side, this is still a very quiet time as far as volatility. And this actually goes along right with a discussion we're going to have in our monthly webinar coming up next Tuesday. Actually, a great discussion point right there. This volatility is for right now, quite a problem here for us. The market wants to see some price movement. We all want to have something to talk about. But as it stands right now, it looks like we're not going to be breaking out of things here just yet here.
Rich Nelson here with us, and when we return, we'll talk about the livestock trade. That's coming up next here on Market Day Report. Here on the Market Day Report, it is time to also visit with Rich Nelson at Allendale Incorporated about the livestock market. Well, Rich, this has been quite a week for this cattle trade. Now we've already got some trade out there, hanging out there about 109. Most of that business, though, done at 110. And now we've got the cattle on feed report, and a lot of folks are saying we'll wait to trade cattle until after that's out.
You're right here. As far as the trade discussion point, there are a few cattle still waiting to trade, as you certainly noted right here. And with these large numbers as far as potential placements posted for this pre-report guess, I think the trade's focus certainly will be on this rather than cash cattle trading. Average trade estimate among the analysts is an 8% higher than last year increase. Keep in mind we're being compared against a very low number from last year, September. And as a reminder for you guys, Allendale is certainly the high guy of the group, calling for an amazing 16% higher than last year placement there.
Rich, you bring up a great point that I want to discuss here for just a moment. There is a wide range of estimates here on this particular cattle report. So when you look at how wide these ranges are, what is that basically saying about the market when they see such a big difference between the low end and the high end? What is the market expecting? Is that a bullish signal or a bearish signal?
I think you can certainly argue from both ends here. Obviously, the numbers themselves look bearish because it would stop what we expect to be a more of a lowered placement pace these next few months. But realistically, we had a lot of numbers pushed through the sale barn last month. The question is whether, what was the motivation behind these numbers? Are these cow-calf producers simply just saying, I certainly don't want to retain ownership of these heifers, or is this an effort where cattle feeders are saying we really want those numbers? And to be honest with you, I think both sides of the argument actually have a valid discussion here.
All right. How does this play into the hog trade then? Because cash hogs have been holding their own. The futures have been fluctuating somewhat this week.
Exactly right. On the cash hog side, 15 days in a row now of higher trade as far as cash hogs. As far as the question now for the next few weeks, keep in mind this is the low point of the month for slaughter numbers. In fact, Mondays and Tuesdays had a couple of plant delays, which caused an artificially low number this week as far as production. But in the next few weeks, we have that seasonal ramp up in supplies, which certainly calls into question this cash hog rally here.
We'll also need to watch these cutouts pretty closely too, because won't that give us some kind of an idea as to just how well the consumer is accepting these higher prices?
Certainly will, and certainly for our discussion on the wholesale pork price as well, this does reflect the fact that wholesale pork has not enjoyed this rally as much as cash hogs. Therefore, we're now talking of a slightly reduced type of margin situation for packers. Still very profitable, but a bit reduced here.
Good point. The carcass is up 44 cents. The loin's up 206. Those loins have really taken a big jump, but the belly market has not fallen out of bed yet either.
Exactly right. Now, we have had sharply lower prices in the belly since the summer peak, but we probably haven't fallen as much as some had hoped. It looks like right now there's still a good residual demand, even in this type of lower demand on a seasonal basis here.
So what do you folks see as a potential trade today for the hog market then?
As far as hogs, we'd look for mostly a steady focus here for really the next few days. We are still one of the people suggesting lower prices will be seen in the next few weeks, but maybe for today and Monday and Tuesday, maybe not hidden just yet there.
Rich Nelson here. And by the way, we want to re-mention your webinar coming up.
That's right. On Tuesday at 8 o'clock, we have Eric Norlin, a CME employee. He's actually going to discuss this whole volatility issue we just mentioned here in the earlier segment there.
Okay, Rich Nelson here with us with Allendale Incorporated. Thank you very much, Rich. And Janet, we're just about 5 minutes away now from opening up the markets here.
All right, see what Friday has in store. Thanks, John.